Welcome in. You're listening to the daily version of the Cortland Economics Report. I'm Al Cortland. Appreciate you joining me. This program, this audio, whatever you want to define it as, is being produced exclusively from my friends at Kitco. Roger and I right now are talking a little bit about gold and silver. Roger approaches this more from a technical standpoint than I do. I'm a bit of a fundamentalist, and because of for fundamental reasons, I am a very, very strong bull. Certainly in the short term and quite frankly in the long term also on the price of gold. And rather than repeat everything I've said in the past about political unrest, questions about the longevity of the U.S. dollar, questions about the longevity of fiat currencies, et cetera, I'm going to turn it over to Raj. And Roger, you came out with a situational alert this morning where you said that your strong feelings about a continued upward trend for the price of gold and silver depended or resulted from your technical work. You were talking about futures prices, etc. Could you elaborate a little bit on that for us?
We've suggested this before, and it's a good thing to discuss because these are guidelines. If you look further ahead in the way certain months are trading on futures, there's websites where you can go to get this information for free. And what you can see is you can see the various steps and stairs in prices in all of the metals that we follow, and most particularly gold. I mean, you can check them out 5 or 10 years. And another way to do this is to follow the options prices. Well, you can see the volume, you can see how many options are being purchased or sold, where the thrust is, and this is very helpful in trying to figure out where the gold is going to go at any given time. But we just flipped over from our June gold contract, futures contract today, to the August contract. That's now the most active. The open interest in August is 325,000 contracts, and the last price on August was 1535. Over the holiday, it was really interesting to watch. We said last Thursday or Friday that even though the U.S. was going to be closed for holiday, and also the U.K., that the rest of the world was going to march forward and be busy trading gold and silver, which is what they did. And they not only were busy trading it, they ran the price up over $20 in Asia. It's come back a little bit since then, but not very much.
Well, I was going to ask you about that. I'm looking right now at Kitco's, various prices, and price of silver is up, price of gold is down $6, price of the U.S. dollar is off. Almost, it's off specifically on the index 0.31, down at 74.63. Typically, there's a correlation between the value of the U.S. dollar and the price of gold. That correlation doesn't exist right now. Positive correlation.
It's breaking apart. It does exist somewhat, Al, but it's breaking apart.
Mm-hmm.
And the reason for that is the Federal Reserve and Mr. Bernanke are continuing to print and sell bonds and U.S. currency and paper, and as a result, we know they're diluting the values.
Mm-hmm.
And, again, what you have to follow here is where are the traders going, because their job is price discovery. That's what they do. They discover the price for cash. They discover the current price for futures, not only for the most active month that they're trading, it's called the nearby month, but they also are looking to trade some further out positions. The further out positions quite often are taken by larger funds, and they follow trend, and they can watch price pull toward the particular trade that they've got. But what we did see, and this is my key point today for Kitco, and that is this. When we shifted from the June contract to the August, the patterns within the charts did change. And those patterns, if you understand how to read them, will tell you quite a bit about what's going on and where people are going to go with price. And the minute I did that, I could see right away that the pattern shift for the August gold looked much more attractive for the long side than the June contract. And that's just time and price moving forward. And what we're seeing today is on that August contract, we saw the continuation triangle finish. We saw the rally of gold come out of around 1490 some time ago in May, and now we're up at 1535. And what the traders need to understand, the investors, is don't get caught up in the daily stuff that much. Watch your weekly charts and watch your farther out trading months and most active months and compare them to see where prices are going to go, and you'll get a pretty good idea what's going to happen. And the way we see it right now, we should probably get a gold and silver rally at least till the 9th of June, and then the next date, the key date, would be the 16th. After that, we may start to slow down this month, and then we go into a choppy trend for the summer, and then in August we start to pick up again. But people are going to be trading gold in that August contract through the entire period from now all the way through the end of July.
There you have it from Trader Rog, and a modicum of insight from Big Al. We're going to be back with you tomorrow.